The numbers have been
Good morning,
huge. I
Brian.
mean, Home Depot with a 31% same-store sales jump. Look at Target earnings yesterday. I guess the only question is there any way that kind of momentum is sustainable longer term?
Well, it's been an unusual quarter, and that's mainly because there is no comparable year to 2020. So the least disruptive measure, as you mentioned early, might be the e-commerce numbers. And those companies that you mentioned, they all posted double-digit growth e-commerce on top of stellar numbers last year, which is telling us that they continue to gain market share online. And when looking at the Refinitiv e-commerce estimates for the next 4 quarters, we're expected to continue to see that customer behavior continue. Now, because of the strong numbers that these big retailers reported last year, Q2 will be a more difficult comparison for these names. So in traditional times, a small negative percentage change might signify that the company is struggling for a regular company. However, for the big names that we just mentioned, like Walmart and Target, a negative 2% decline might actually tell us that market business volume is actually holding up very well. So it's very important to dig into these numbers even deeper. Look at e-commerce numbers as we progress and move forward into 2021.
Well, how much, Jharonne, do the comparables even matter? Because the sad reality, in history will write this book down the road, but the sad reality is, a year ago, the government said to pretty much every local hardware store, you have to close down. There's COVID. We're only going to allow these stores to open. You can agree with that or disagree, but the point is the comps were easier because other competition was shut down. And unfortunately, many of those mom and pops, they went away. They never reopened their doors. The big companies in some cities are the only ones that are left. How much does that propel their business for years to come?
Well, it's not only the big names that reported this week that are doing stellar. It's very important to know that the earnings growth rate that Refinitiv is looking at is 111%, which is huge. And it's not just only because of the easy comparisons, but it's also because of the leisure product sector. And we're talking about toys at Hasbro, the golfing gear at Callaway, and also outdoor gear at Vista Outdoor and Polaris. So we're seeing that a lot of the consumer behavior that we saw during the 2020 pandemic are still sticking into 2021. So they're still going to the discounters. Consumers are still shopping at the discounters. They're still shopping at the home improvement. They're still investing in the stay-at-home experience, and they're also still investing in the outdoor gear. So this shopping behavior has not change, and at least for the beginning of the data Refinitiv shows that 2020 was the pandemic, the 2021 will be the transition year, and it's not until 2022 that we're going to start seeing things going back to normal, even for the small businesses.
The death of the American shopper has left a bunch of beaten up investors in its wake. We love to shop in this country, Jharonne. It is kind of a national pastime. Everybody says, the internet's going to take over everything. The reality is, I don't know about you, I go shopping because I want to get out of the house. I love my family, I love my kids, but there are times you just want to go do something else, right? How much of the in-person experience do you expect to come back? Because I know you're not a REIT or a real estate analyst, but the mall owners are certainly hoping people walk around, on their own feet instead of just hitting click on a mouse.
And to your point, Shoe Carnival reported record-breaking earnings yesterday, and they did this by lowering their discounts and removing their whole buy one get the other half off promotion, which is telling us that consumers are willing and able to pay full price again for the latest fashion items. And this is in line with the Refinitiv consumer sentiment, which actually is back at pre-pandemic levels, and is telling us that consumers, like you mentioned, like yourself, are starting to gravitate back to the stores, are going into Shoe Carnival to try on the latest merchandise, and they are paying full price for it. So they are feeling good right now. There's no stopping them. The only thing that could diminish the strong sentiment that we're seeing is the unemployment number, because that's the one economic indicator that consumers understand very well. And if they feel that this will continue to deteriorate, they're going to put their hands in their pockets and hold back on spending.
Shepard Smith here. Thanks for watching CNBC on YouTube.